Meet Rod, more bang for the buck. Wall Street suits, your time is up. Meet Rowdy, more bang for the buck. Meet Rod, more bang for the buck. Wall Street suits, your time is up. Stack that premium, protect my six. Upside open, but I hedge that risk. Garage born plan, average Joe, taking a stand. Roddy's the method, R&D is the man, R&D is the man. Yeah, didn't wait on permission. I picked up the weight, phone in my hand, early hours, learning to take. Garage taught patience, no room for excuses. Every choice mattered cause the outcome it uses. I stopped handing the wheel, the voices I trusted, took responsibility. That's when it functioned. If it worked, that was earned. If it failed, that was mine. Family in my vision, so I stayed on the grind. This wasn't about hustle or flexing the grind. It was structure and rules I could run every time. Brody came from effort with discipline attached. Built for the people who carry the weight. Caddy the weight, so meet Roddy. More bang for the buck. Wall Street suits, your time is up. Stack that premium, protect my six. Upside open, but I hedge that risk. Garage born playing, average Joe taking a stand. All D is the method. All D is the man. All D is the man. I don't chase green candles, I monetize waiting. Data working daily while they're guessing and praying. Premium stacking, structure over sensation. Volatility paying rent with no conversation. Wrist boxed and tight before the play even starts. Calm under pressure, John Wick with the plan. They argue direction, I structure the trade. Let volatility work while emotion gets played. Fast money flashy, but it fades when it's pressed. I want repeatable wins with my downside dress. Not a lottery ticket, this a blueprint I trust. Level the field, get more bang for the buck. Meet Robbie, more bang for the buck. Wall Street suits, if your time is up. Stack that premium, protect my six. Upside open, but I hedge that risk. Eyes born playing, average Joe, taking a stand. Roddy's the method, all D's the man, all D's the man, is the man. Family ahead. I don't need hype, I don't need a crowd. Just rules I respect when the pressure gets loud. This ain't for everyone, that's part of the design. Roddy rewards the ones who take responsibility every time. Roddy, Roddy the method. Roddy, the people, the people, Roddy. If you want it, carry the weight. Meet right.
Good morning, everyone. Today is Wednesday, halfway there, March 25th. And today we're going to do something a little different. We're going to show some love to the VIX. We're going to talk about the VIX. We're going to talk about trading the VIX mainly, and see, why that could be a good tool to use, or, begin in a bull market, in a settled market. Right now, we're not in that type of market, but when we get there, maybe something to think about, right? But yeah, we'll talk about that in a second. Before that, let's look at some Bitcoin action here. By the way, yes, confirm audio if you will, if you could. Bitcoin went down yesterday, back down to 68, and now this morning it's back up to 71. So yeah, what happened? I don't know. Again, more war crap, and it is what it is. But we're in the 70s back again. So welcome back again. 70s back. Tell your friend. All right, stockanalysis.com. What are they telling us? They're telling us the S&P right now, as of 6:06 a.m., the S&P is up 0.84%. The NASDAQ is up 1.03%. The Dow is up 0.83%. And the Russell is up the most at 1.35%. By the way, I am broadcasting on two channels, the Retire on Dividends channel and the Retire on Options channel. Oh, yeah. And, of course, X. So it doesn't matter where you joined from. But, yeah, if you're not subscribed to the Retire on Options channel, you should be able to click it from this video and then give it a sub and say, what's up? All right. Anyway, so what the heck is a VIX? I mean, like, seriously, what the heck is the VIX? Let's see. I went directly to the CBOE website, right? Which, of course, what is the CBOE? I mean, where does it end, right? It's the CBOE. It's formerly the Chicago Board Options Exchange, right? Largest options. What does it stand for, right? Let's where the hell is it? Yeah, so anyway, it stands for what? Global Markets Inc. I don't know, whatever the hell it stands for. It's the world's largest options exchange and a leading global provider of trading, clearing, and investment solutions. Founded in 1973, it operates various markets for options, futures, blah, blah, blah. All right, but we're not here to talk about the CBOE. That was just a quick overview. We're here to talk about the VIX. So when you go to their website, they have a lot of useful information about the VIX. I only looked at some, but we'll go through it together. All right. So here is you go to VIX and you go to, I guess there's an overview first. It says the VIX index is considered by many to be the world's premier barometer of equity market volatility. The VIX index is based on real-time prices of options on the S&P 500, the SPX mainly, is designed to reflect investors' consensus view of future 30-day expected stock market volatility. The VIX is also commonly referred as the fear gauge or the fear index, as they say. There's a video here. I didn't listen to the video, but I'm sure it's helpful. There's a couple things here. They settle in the AM, which we'll look at that. We'll look at their contracts soon in a sec. But yeah, they have an unusual schedule as far as the options contracts because they expire Wednesday morning. Like, what the heck are we supposed to do with that? What I've been doing, I make my moves on Tuesday afternoon, because I don't want, I don't know what time in the morning. I think it's pre-market, to be honest. All right, so that's that, and let's keep going down the line, see what else they got going on here. They got some good details here. So here's the description. It's an up to the minute market estimate of expected volatility that is calculated by using real time. We saw that. Premium quotation. Here's the VIX stated in points of fraction. 1 point equals 100. Minimum tick. Yeah, this is like, I don't even understand what they're saying there. Strike prices, generally minimum strike price intervals are as follows: 50 cents where the strike price is less than 15, $1 when the strike price is less than 200. I mean, for the most part, I think it's dollar intervals, right? In between strike prices. I will double check on my phone real quick while we're talking. By the way, good morning, everyone. I'll look to see who's here in a second. Oh no, it's 50-cent intervals. But I guess that's accurate because the price, well, it's not less than 15. It's certainly less than freaking 200. But anyway, let's see who's here. This fine morning, right? This beautiful morning. The Ruckus was the first one here. I know him from X, so welcome, the Ruckus. I guess that's your YouTube. I like when people make the same username from YouTube and X. Debt to Corp Man, welcome. Double D, Allen. We got JG and a bunch of letters in the house, or Judge, right? A1, what's going on? Anyone affected by IBKR chaos? No idea what you're talking about. Sorry, I don't use international brokerage, whatever the hell they're called. Maybe someone does, right? Maybe Cletus. There's Wolf. Ooh, Wolf Dumod in the house. Mr. Fantastic Hero from X. Welcome. Parabolic in the house. Looking forward to this video. Sweet. Yes, the VIX is down today because the market's up, right? The market's up because people are, calming down. Why? I don't know. Why is the market up? I don't know. But I don't care. It's up. It's good. But the VIX is down, which is okay. All right. So let's see what else is going on. Good morning, Bruce. Good morning, LA. And yeah, I'm all caught up. All right. So expiration date. Yeah, like it says here. It says usually a Wednesday. Yes. 1 week it was a Tuesday, which was weird. But I don't know, man. It is what it is. Will be identified explicitly in the expiration date of the product. Yep. If that Wednesday or the Friday, that is 30 days. Okay, great. Contract expirations, up to 6 expirations and up to 12 standard monthly expirations in the VIX may be listed. The 6 weekly expirations in the VIX options shall be for the nearest weekly expirations, obviously. So it's for the next 6 weeks. They'll go out. It says they'll go out 12 months. I did not see that the last time I looked. I saw they went out like maybe 9 months. I don't know. We'll have to take a look at that. But I hope they go out 12 months. Exercise style, European. Yeah, they trade on the European Stock Exchange. Well, options generally may be exercised only on the expiration date. Yeah. Well, that's the thing. I don't know. Here, last trading day, the business day prior to the expiration date of each contract, when the last day trading is moved. Okay, settlement. Here you go. All right, I haven't read all this crap, but this is way too much. All right, what do we got here? Time for expiration. All right, so I mean, here's my thought. And I'm not reading all this, but I'm thinking like if you're in the money and you let it expire, you just have to do a cash settle, right? That's kind of how some of these work. No position and exercise limits are in effect. Strategy-based margin. No, we're looking at that. All right, so that's some stuff there. What else they got here? Mini VIX futures, options on VIX. Let's see what this says. Options on the VIX index futures offer more choices, express directional views, manage equity, blah, 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 blah. Okay, great. And then there's VIX FAQs, which is cool. And it just says, like, what is the index? We kind of went through that already. How is it calculated? I mean, I don't even know, man. I mean, I'm a kind of a math guy, but I'm looking at this and I'm saying, like, yeah, okay. I would love to understand how they're doing this. So yeah, if I have the time one day, we could just spend that time and just go through it. Maybe I'll get another math guy on here with me and we'll just calculate it. I wonder if we can set up a formula within Google Sheets, or maybe even Rob. I'm thinking Rob could probably do it because you may need the options chains, Rob from stocktools.app. But I don't know, just a thought. But yeah, here's how you calculate it if anyone's interested. We're not going through that because, we're not nerd geniuses over here. What does the VIX index measure? I mean, we kind of went through that. Can I hold the VIX index? Unlike the S&P 500 that is comprised of relatively stable portfolio of stocks, the VIX index is priced using constantly changing portfolio of SPX options. In fact, blah, blah, blah. I mean, they're going to answer the question, can I hold it? No, you can't. You can't hold the VIX index. That's the answer. I don't know if it's even on here, but you can do options on the index. What products are listed? Man, these answers are way too long. Final settlement. Let's see, the morning of. Yeah, so there's several ways to do settlement. Okay. Again, there's a lot of information here, which I'm sure this is like a bit much for more than you bargained for. But I'm just taking a look, man. Nothing too crazy here. All right, I think that's it. I don't know what this historical data is. Let's see. Link for historical data. Yeah, I don't need all that. All right, so let's move on. What else do I got here? So I did this little chart here. This is from fred.stlouis, fed.org. It was a nice looking chart, right? I feel like we could use this. I hit max, and it goes back to 1990. And you can kind of see, man, like just look at the bottom, right? What is the lowest the VIX would go? Here's the $10 line. Can you see it? If you look, sure, in 1994 it hit 10, right? In 2007 it hit 10. In 2017 it actually hit 951. And then as recently as 2024, 25, 1244. And then this year, or late last year, whatever it was, when I got in, actually, let me check when I got in. I have it here. Let's check. When did I start my position? All right. So January 2nd, it was 1484. 1484. And yeah, that was around here. 1484. Where is it? I don't even show it went down that much, but it did. So I got in when it was in the 14s, and that's when I started my leap, which we'll get into. But, before we even talk about that, the reason I was looking at this chart, right? And where does the VIX mostly sit, right? Above 20 or maybe mid, it's definitely above 10, right? Most of the time it's above 20, and it's certainly most of the time above 15. So if I bought a leap at 14, can I make money? I thought so, right? So that was my thought process behind it. I didn't think I was going to get lucky and wait until it hits 10. I mean, I don't think it's going to hit 10 anytime soon, especially now with all this crap going on. If you look this morning, the VIX is at what? What's the VIX at? 20 something. Let me see. 25 it's at this morning. So yeah, man. And it's, again, the whole reason I looked into this is when the market was like, market was at all-time highs. I'm like, how do you hedge? Like, what do you do for hedging? And then I started learning about the VIX. I'm like, why not just buy a leap on the VIX? Because if the VIX only goes up when there's fear in the market, obviously that means typically the market's tanking. So if the VIX goes up, the market goes down. So if I buy a leap on the VIX, I'll make money when the market goes down. That was my thought process, right? So that was the original thought. And then I was just going to wait when it went above, say, 14 to another number, I would sell it. But instead, what I decided to do is create somewhat of a poor man's covered call, which means you buy the leap, you buy the call, and then you sell calls on that leap. And that's what I've been doing. All right. Which we'll look into in a second. But let me get through some comments and see if you guys have any questions. I will pause if you do. I once feared the VIX, not so much anymore. Yeah, man, utilize the VIX. I mean, we have to. I got to be honest. For like I've been investing, I don't know how long now, but it wasn't until till this year or late last year that I actually knew even what the hell the VIX was. Like, oh, everyone's like, oh, the VIX is up. The VIX. I'm like, whatever. What the hell does that mean, right? But now, I'm jumping in. I'm utilizing it as a tool. Why the hell not, right? All right. Bruce says, how about my guesstimate on Ulti yesterday? Nailed it on the head. That's a nice distro. I haven't not even seen it. We could look at that after if you guys want. Higher VIX equals fat premiums usually. Yeah, man. But unfortunately, it usually means the market goes down too. All right. So that's the prices. Now, if I look, why does it jump up, right? Why does it jump up? If we look, again, I don't know how far back the VIX goes, but I think it is further than this. I believe 87 maybe, but who knows? But on what do we got? 9/11 was what? Where is it? 2001. Is this even accurate? What was it at 44? Losing my voice already. Here's 40 in 1998. What's up here? Let's see what this date is. 2008. That was the global financial crisis. So it hit 59. I'm showing it actually hit 89. Again, this chart maybe not be the best. COVID was in 2020. Where the hell is that? Yeah, here we go. It went up to 53. I'm showing it went up to 85. But you get the gist, right? When crap happens, like a war especially, it's going to go up, right? It's going to go up in value. All right, now let's talk about options. If you guys have any questions, just leave them in there. So here's the VIX 26.95. That's kind of where it's sitting at right now. So here's an options chain, right? Right now, if I look, actually, let's see how far they go in expiration. All right, so they only go to November. It says they can go out 12 months, but they're not doing that. They're going out about 8 months to November. So if you wanted to buy a leap today, you could only go out to November, which I don't like. I mean, I wish I can go further, but I feel like they know they don't have much control over what the VIX does. So it's hard for them to price probably the future dated, any further than November. I don't know. That's my guess. But to be honest, I wouldn't buy a freaking call right now. I wouldn't buy a leap at this price because I see it coming down at some point. I mean, it may jump up to the 30 range for a while too, because there is a lot of uncertainty. But when you see the options, so see how this expires 4/1. I believe that's the Wednesday morning. So that's the next expiration date. And if you look, okay, say it's at 26.95. So the covered call for 27. There's a bid, there's an ask, and then of course there's the last price. Last price was 205 for a weekly. That's a beautiful premium. That is a solid ass premium. At the 28, 178. The 29, 155. The 30, 134. There is some really, really, really good premiums here that you can make selling calls. Weekly calls on the VIX. Now, you have to be smart about it, though, because if you're doing a poor man's covered call, you have to determine how much you paid for that covered call. All right, let's go back to my example. Again, on January 2nd, the latest expiration date was September. So I bought a leap up to September. Again, the price of the VIX was 14.84. I decided to go in the money. I did buy a call at 14. So it was 5.66% in the money, which means it's going to cost me a little more. How much did it cost me? It cost me $8 per share. For one contract, that's $800. But again, it's $8 per share. Keep that in mind. All right. So let's go back here. So $8. If I sell a call, right, and again, you're not going to get you can't get assigned, right? You can't. But you don't want to put yourself in a spot where you're just stuck and you can't do anything, and you're going to have to pay money, cash settle. Like, you don't want to sell a call 14 and then it goes to 20 and then you have to pay $600 for the difference. You don't want to do that, right? But what you can do is tack on the $8 per share that you paid. So you do 14 plus 8, right? So obviously that would put you at 22. If I sold a call at 22 and I had to pay $8 per share to cash settle, I can offset that expense with the buy call I have for $8. Obviously, it'll be worth more because there's much more time value on the long call versus the short call, right? Because again, I would probably close it on the Tuesday afternoon when all the time value, essentially decayed, and I would make money on that trade. So anything 22 and above, I'm always going to make money if it hops up, right? But what I'm doing now, so this is my, of course, if the VIX, was still at 14, I couldn't really, selling calls at 22, you may not make that much money, but still it might be worth it. Like you'd have to look. I don't know. But I was lucky. I got in, and yeah, of course, this is not, I didn't know I was going to get lucky and it was going to jump up fast. Like, because again, yes, this is luck. I'm not going to lie. This is luck because I didn't know what the hell I was doing. I figured I'd try something new, which honestly, I researched it and I couldn't find anything on this. So that's why I said, what the hell I got to lose, right? So I bought the leap. Again, that's why I only bought one. Believe me, if I thought I knew what I was doing, I would have bought like freaking 5, 10. But I bought one stinking leap. So again, $14. I waited, right? I waited about a month or so. And then I sold my first call. And at that point, again, I got lucky and it went up to 1890. The VIX was up to 1890. So I was able to sell a call for $25. $25 freaking dollars. So obviously 22 was my low, right? Anything above 22, that's additional appreciation. That's additional income. That's not income, but that's that's capital appreciation if I have to settle, right? That would be again money on top, right? So 25 minus 22, that's $300. Again, if I had to close out the position, that's $800 already plus the $300, so that's $1,100. So I subtract that, I take that and I subtract out how much I'd have to pay to close out the short call. But I'm making it high enough so I don't have to cash settle the short call. I'm making it high enough at a price range where I don't think it's going to stay there, right? If I go here, when does it stay? Again, do we trust this chart? I don't freaking know. But I could always pull up Yahoo too. Give me a second. VIX chart. Yahoo. Is it Yahoo? No, it's yeah, Google. Google it. All right, let's go to Google. All right, here. Hit max. You guys see that? All right, here. So I know it's hard to see, but 25, I mean, is it going to stay above 25? Right? I'm looking at this chart, probably not for too long. So I was okay. I was like, 25 is my number, man. 25 is my number because I can make, an additional freaking 300 if we blow through. And right now, guess what? Yeah, it blew through, right? It's 20. Well, it's 25.80. It's not that much higher, but it is what it is. It's okay where it's at. It's actually perfect where it's at. Let me take a sip of coffee. Okay. All right. So this is when, again, I bought the leap. I waited and I sold calls once it hit like 18. And then I sold a 25 call, a 25, a 24, a 25. So obviously I only went down to 24 the 1 week because I got greedy. It wasn't enough premium at the 25. So that's basically the summary. So these, I've been doing what? 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 weeks already, right? And how much have I been making per week? $36, $28, 32, 52, 43, 81, 120. 120 because that point I waited Tuesday afternoon. I rolled. Again, I was hoping yesterday I would end up at this range 20. If it closes at like 24, the high 24s, the low 25s, that is when I can make the most money because I'm rolling at the money call essentially. And you're going to get a lot of premium, especially if all that time value decayed on the old contract. So 120, this was a beauty. 88. And then yesterday, again, like I said, I was rooting. I was like, VIX, go down, go down, go down, VIX, go down. It didn't go down. So I had to roll it when it was at like 26.71, which is okay. So all that means is, see this 26.71 minus the 25, that $1.71, that difference, that's the intrinsic value. You have to pay that automatically. plus any extrinsic value for any time left over. And there is additional time because the contract expires the next morning. It doesn't expire the afternoon, right, of the Tuesday. So you have to consider that. All right. So anyway, I still got $77. So again, this thing has been nothing but a beauty moneymaker. Again, luck of the timing, maybe. Sure, absolutely. And if you look at the numbers here, again, when I'm looking at this, I really only paid $800 up front. So I'm generating premium each week based on that risk. $800 is my risk. $800 is my expense. $800 is all I paid out of pocket. So like that first week, I made $36. That's a 4.5% return in a week. If I multiply that by 52, that's a 234% annualized yield. Is that worth it? Yeah. Then again, even $28 less, 182% annualized yield. $32. Again, this is all based on $800 capital, 208% annualized yield, right? The 120, for God's sake, that was a 780% annualized yield, right? So what's happening here? I'll tell you what's happening. See all these numbers? They're adding up and they're offsetting now this 800. So if I go down here, my cost out of pocket now has been $243. Okay, $243. Now, how much time do I have left? Right? How long is going to take me to make $243? That's a good question, right? So, basically, I don't know. It probably, if I were to guess, 3 weeks, 4 weeks. All right. So if it takes 3-4 weeks, let's say 4, right? That's here, right? That's this spot here. Then what does that mean? That means we are at the famous word house money, which means, guess what? We made the premium. We made all the premium we could. We paid off our original investment, and now we have 1, 2, 3, 4, 5, a lot of weeks left, right? A lot of weeks left to play and make additional money, right? Does that make sense? So if you look here, let's do this for fun. Oh, crap. I know how to type. Give me a second. Does this make sense for those of you still listening? For those of you that are live. All right, so we got what? 33 weeks. So if we are to house money at 13 week, right? That's what, halfway. That's not even halfway through, right? It's about 40% of the way through, almost halfway through. So, I mean, you'll still have more than half the time to make whatever income you want. And if you don't make a dime on the leap in the end, it doesn't matter. Who gives a crap, right? Who really gives a crap? It doesn't matter. This is now an income play, right? This is an income play because, yeah, because think about it. If I keep going, ideally, right? Ideally, this is total premium income. I could probably do like average on the side here. Equals average. And now I'm getting crazy now, but I just want to show you guys like what could be. So, I mean, so far, everything's really been working out. So I'm not saying, like I said, am I a lucky ass how this thing worked? But again, I think on the next time the VIX settles down, that could be another opportunity. I mean, for me, I'm jumping in for sure. And I'll share that as it happens. But all right, so look at this. Average, I'm making about $62 a week. So when all said and done, how many weeks do I have left? I have what? 33. Yeah, we'll do weeks left. Weeks left. Again, this is gigantic because to the left, we got all this, yeah, we got all that stuff going on. Sorry. A little ugly looking, but, you know, you get it. All right, so weeks left, we have, so we have 33 total weeks, and we're at week 9, right? So we'll just say we have 24 weeks left. If we make an average of $62 per week, this will be an additional $1,485. So if you take that and then you add the already made 557, you would make 2,042. 2,042 net of the 800. Obviously, yeah, that's a profit, clear profit. That is a no-brainer profit. But I'm not even, that's assuming you're not going to make money on the long call. Don't forget, you have a leap. So if the VIX, if you're done here and the VIX at this date is at, say, $20, guess what? You just made another $600. So that's going to be on top of this income. All right. So does that make sense? Or is this too much? I think it makes sense. The Ruckus says this will be a multi-watch video. Yes, sounds great. Yes, it will keep paying until you decide to get out. But yeah, no, it's only paying well because again, my strike that I want is 25. I'm comfortable at 25 and it's trading at 25. So yes, I'm getting lucky that's trading in that range. If the VIX goes down, say to 20, I could, yeah, sure. I could sell at 22. Again, that's my low bar, right? Or I could sell at 25 and just get less premium. Again, that's up to you as the trader here. So just a thought. But if the VIX goes to 40, yeah, I'm screwed because I'm way in the money, right? It may be at that point, I may have to cash settle, close out the whole position. Or I try to roll and make money on the roll until it settles back down. That'll be, again, I'll deal with that when the time comes. But right now, I haven't had to deal with that. It touched 30, I think, right? The VIX touched 30 recently. If we go to, let's check it out here. So let's go to the 1 month. Yeah, oh no, it touched 29.49. And that was okay. Because that, you know, it came back down. After looking at the VIX and tracking the VIX, yeah, it comes back down, right? It goes up, it comes back down. It goes up, it comes back down. So again, I don't know what the hell the VIX is going to do in the future. All I know is it's a tool to use, right? And it's just another tool that, like, in a freaking bare ass market, it's a, thank goodness I have the VIX, like, because my other positions are just getting destroyed right now, right? I mean, today's green, of course, but you know, I don't believe it. It's like fake ass green. You know what I mean? So, you know, this position has been nothing but good to me. So the moral of the story, ladies and gentlemen, is if the VIX drops below a certain number, you could, you know, do the same thing. You could buy a poor man's covered call, just buy the leap, right? And then sell calls on it. Start with, you know, maybe you can get a deal. Maybe $8 was expensive. It probably was, right? I probably overpaid. Maybe I could get it for $7. I don't know. But I paid $8 per share. That's a lot of money. You know, if the VIX stayed at 1484, if it stayed at 15, if I sold a call at 22, how much would that make? Maybe not as much. Maybe I wouldn't be, you know, making a video right now about, you know, partying about it. But, you know, it's still, I think, would done well because there's always going to be something in the news that's going to make it spike, right? Oh my God, this happened. Oh my God, sell your stocks. And then the VIX will go up. Or then I'll be like, you know, a beautiful tweet will come out and then it'll be like, okay, the market, okay, bye. You know, stuff like that. So I don't know. Does that make sense, peeps? Does that make sense, peeps? All right. So Yeah, what are we calling ourselves? The VIXers? That's kind of what I called. Yeah, I had a VIXing. I was calling it VIXing, but this I just called it the VIX 14. But we got to think of a fancy name for this trade. All right, let's see what happens if you forget to roll. You just I mentioned that before. I think it would just cash settle itself. So in the example of yesterday, it was at 26.71. I had a $25 covered call. I would expect that they would take 26.71 minus 25 times 100. So a dollar. So they would take $171 out of my account, and then that would close. That's it, right? That's it. That's what I would expect. I have not tested it. I would like to, but not with one contract. When I have like 10 contracts, sure, I'll do it. I want to see what happens. You know, what's the worst case? What's the worst that's going to happen? They're going to take my leap. Fine. But again, if I have 10 contracts, that's great. But, you know, you kind of, I mean, I'm sure we could just look it up on Google, but it's also more fun to see it in action. All right. Question. I love the questions, Parabola. Keep them coming. If you never rolled it once, the leap just expires, worthless, and you get your 800 back. If you never, well, yeah, if I never sold a call? If I never sold any calls, maybe, is that what you're asking? Like today, say I never sold a call and it's at 26 bucks. 26 minus 14, obviously it's worth money, right? $12 intrinsic value per share. $12 times 100, $1,200. 1,200 minus 800, yeah, a $400 profit right there, plus time value. So yes, I didn't have to sell covered calls, but I just saw it as soon as it jumped. I'm like, this is perfect. And it's European exchange. And it's on that 60-40 tax treatment. There are just so many freaking benefits. I didn't even talk about that. All right, let's keep going. Question. Thank you for sharing this trade with us. What's the difference between poor man's covered call and selling puts on the VIX? Same capital. Well, right now, in order to do a poor man's covered call, you have to buy the call. So that's in this example, $800 in capital. If you sell a put, you know, it depends. You know, obviously that's going to cost you a little more in capital. Like if you sold a put at 14, that would be, you know, $1,400, right? So, but yeah, I haven't dove into selling puts on the VIX. Will I? I don't know. Like right now, let's look what a put is for next week. So this is for April 1st expiration date. The last price, if we sold a put at that's crap. 22. Let's just say 22. It would pay 40 cents per share. It's okay, but then, yeah, if it drops. And it can drop. So is that worth the risk? So if it drops, let's just say you do 24, right? Okay, you make 112 bucks. That's good. And that drops to 20. What are you going to do? Keep rolling it? Or are you going to cash settle and pay out in pocket $400, right? I don't know. I'm not saying don't sell puts. That's certainly a choice. And it could be part of, again, we can have just a VIX fiesta, right? Right now I'm on the call side, obviously, but you know, how to play the put side, you know, that's another story. But typically, like if we were at the $14 range, sell a put at 14, yeah, it ain't going much below 14. So I would sell $14 puts all day. But to be honest, selling puts now, I don't know. I wouldn't do it. If you get assigned, your 800 gets swept away. No, the long call would be separate. If I get assigned on the short call, the covered call, I'd have to pay that difference. I could do whatever I want on the long call, right? Because again, it's cash settled. So that's the beauty about it. They'll just take the cash. And then I can keep the long call or I can close it out and cash out. Do you need a special level of trading on Schwab? That's a good question. I don't know. I did sign up for the high level of trading. So I can't really answer that. I don't remember when I had the lower level because I didn't try to trade the VIX. So I'm sorry, I cannot answer that. I was watching on the other channel. Which one? Retire on options? I don't even know what channel you guys are on, but I figured I'd put both up as a party. Depends on your broker. I had a CC get that assigned that was secured by a leap, and the broker didn't sell the leap. It just opened a short position on my cover call. Okay, yeah. You need to watch. This is why we love Wolf, right? All right. It's normal volatility. It's much lower, and premium is normally very nominal, correct? Its normal volatility is much lower, and premium is normally, well, I don't know what's normal, right? What is normal when it comes to the VIX? Again, 5-year chart. What's normal? We don't know. This ain't normal. This is definitely ain't normal. $45 in April, right? The tariffs. No, that ain't normal. Normal is 20. Normal is 20. The IV on the VIX, yeah, it's like 100. Sometimes higher, sometimes lower. Again, I'm new to the VIX, trading the VIX, so I don't really know what we call normal yet. There's the ruckus. Hey, the ruckus. You're on X. You got to retweet it. All right. That's the rules. You didn't know that? All right. Next route, I'll look into it. Average is 18.20. Yeah, exactly. I mean, I wish we can get to 18 now. I honestly do. Because I'm like my greedy self. I want to buy more leaps. But I mean, I wish we can get to 14. I don't even care about this position because I want to buy so many more. And have fun with it. I could probably make enough income on the VIX alone and pay for the freaking bills. But could you imagine if I bought 10 leaps? Oh, man, I'm not that brash to do something and not know what the hell it's going to happen. But God, I'm losing my voice today. All right. So you buy the call and sell the cover call against it. Yep. That's it. That's it in a nutshell. You buy the call. So the only question for you is if you're going to do this. Well, number one, I would not do this right now because the freaking it's at a high. But you would look at the options chain, right? And my process, not financial advice, I always just pick the latest leap. That way I have plenty of time to make that expense, right? So if I go to the November 18th, right? Let's just say I'm going to buy a leap at the current value or the strike under, right? All right, so you buy a call. Right now it's $4.30, right? For the $26. I mean, that's cheap. Something ain't right. But again, the open interest, there's not much interest here because it may be a new expiration. But anyway, if you look out to November and you buy a leap at 26, that would only cost you $4.30. That's not bad. And you can sell calls at what? $30. But again, once it drops to 20, you're going to sell calls at $30? No, probably not. So that's what I'm saying. I'm not buying leaps right now on this freaking price. But yeah, you buy the leap and then you sell calls on it. But again, you could buy a $26 leap and then sell $26 calls. You could do that. You could do whatever the hell you want. That's the beauty about options, right? All right, 80 something during COVID. Yeah, I have the numbers here actually on the bottom. I did make this for my original video. COVID was like 85, see? Yeah, you're saying? Nah. But it got yeah. Let's see. We retweet you bet. All right. This is too good of info not to distribute. Thank you, the ruckus. You the man. You the ruckus. You causing the ruckus. All right. Kids are yelling already. What the hell is going on upstairs? If it's at a high, why not buy a put? Good question. I don't know. Why don't you buy a put? I don't know why I'm not buying a put, but why don't you buy a put, right? Let's see. Buy a put. $6. Yeah, I don't know, man. Again, there's so many ways. I'm not saying what I'm doing is like the best thing. I'm just saying, why not trade the freaking VIX? It's a tool. It's freaking awesome. I'm having fun. No, I wouldn't do it. When I start the leap, I did the leap separate, and you saw I waited a month to sell covered calls. I mean, thanks to someone in the Discord, like, why don't you sell calls on it? I'm like, I don't know. And I just started selling calls on it. So I bought the leap. I waited a month. It just sat there, and then I sold calls. I would not do it together unless you want to. I guess you could. Because if you buy a leap at 14, you got to think the VIX is going to go up from 14. So why not wait a little bit to get some fear in the, fear in the market, right? And then it'll pop, and then boom, sell calls. Boom, sell calls. Boom. All right, premium buying that could be a reason. I looked at that. You can. The problem is how fast it might drop below your cash put. Yeah, I don't know. If you guys try it, let me know in the Discord. I'm curious. The VIX at 26 and buying a put, it's kind of if you can catch it, yeah, like 30 for sure. I mean, you saw you saw the chart, right? Again, over the past, let's do 6 months. All right. So the highest is here, 29.49. So if it goes to 30, you buy a put, you're probably gonna make some damn money. Right? If you go 1 year out, what's the top? The top was 46. Okay. But again, that was when? That was the tariffs. So I mean, who knows, man? Who knows? All right. That's it, man. That's it. Well, that was long enough. That was freaking 52 minutes. But question, or are there any other questions? And if not, was this helpful, or do I need to like redo this in a different format? Because I'll talk about the VIX all day. I really don't care. Do I need to I don't know. What do you guys think? Is there any other tool outside of the VIX like this that we could use? But I just don't understand why people don't talk about this more. What am I missing? Like, I always feel like I'm doing something wrong, like something I shouldn't be doing, but no one talks about trading options on the VIX. I don't get it. But this is a moneymaker. You guys agree? All right, coffee time. Oh, that good. Oh, that good. Parabolic, any more questions? Alan? The ruckus? I know sometimes there's a delay. Thank you, Wolf. Thank you very much. All right. I don't think there's any other questions. But yeah, so should we play a song on the go? Yeah. Of course, as always, this is not financial advice. I am not a financial advisor, and this video was for fun and entertainment. So hopefully you had fun. Hopefully you're entertained. If not, hey, I don't know what to tell you, brah. Come back later. We'll be a little more entertaining. You got 2 covered calls. No, this one I didn't gray out yet because it's part of my Saturday video coverage. But this one I did the rolling order on, and my new position is 25. So I rolled the 25 to a 25 when it was at 26.71. So yes, in the money roll, pay a chunker to close out the old, but got a massive premium to open the new. In the end, I made $77. All right. The difference is that the VIX moves quick. That's for sure. That is for sure. But as long as you sell a call, you don't even care if you get blown through. You'll make money either way. It doesn't matter. I don't stare at the VIX. I only look at it on Tuesdays. Hey, Bruce likes it. If Bruce likes it, it's a winner, right, Bruce? All right. Let's pull up the VIX chart. I think this is live, right? Maybe. I don't know. Or what else do we have the price here? 26.95, 25.70. This is as of 5:38 a.m. When is this as of? 5 p.m. All right, so I guess this is more current. YieldMax is out. Sorry, I don't feel like covering that. But I'm gonna play the Rod song, and I'm gonna let you guys think of a keyword. All right, let me get the song going.
Ooh. Yeah. Good morning, friends. R to the O to the D. Retire on dividends, you know me. Cash flow mindset moving differently. Numbers don't lie, plans stay ready. If you want that life, say freedom with me. R to the O to the D. Retire on dividends, you know me. Built, not sold, yeah, intentionally. No hype talk, just clarity. If you want that life, say freedom with me. Mid-40s, married man, house stay loud. Raising up boys, turning boys into men. New puppy running, chaos around. Still clocking in, but he plotting the end. Giants fan scars, yeah, he wear that pain. Smiles through the losses like part of the game. Never throw shots, never talks that mess. Builds people up, less results address. Streams every day, never missing a beat. YouTube live X when the mic get heat. Not selling dreams, just showing the math. Wins and drawdowns, full on his past. Spreadsheet brain with a streetwise frame. Plays of discipline, never chasing fame. R to the O to the D. Retire on dividends, you know me. Cash flow mindset moving differently. Numbers don't lie, plans stay ready. If you want that life, say freedom with me. Yeah. Options on screen, risk handle precise. Structures built calm, every move got a price. Cover calls roll, protection in place. Time on his side, patience setting the pace. They say slow down, he say stay exact. Same calm tone when the market snap. Runs through mud, just to test that will. Same mindset when the chart goes still. Sings on the post, crowd laugh, he grin. Go dig a hook, but the lesson still win. Movie quotes fly, wrestling frame. Serious work, but he keep it light, man. R to the O to the D. Retire on dividends, you know me. Cash flow mindset moving differently. Numbers don't lie, plans stay ready. If you want that life, say freedom with me. If you want that life, say freedom with me. This was for fun and entertainment purposes. I hope you have fun and were entertained. And if not, I'll do better next time. And if you made it this far, and you want to make sure everybody knows, you got to say the keyword. Freedom!
All right. If you made it this far in the video and you want to prove it, you got to say the keyword. I like pump up the volume, Bruce, for the music part, but we'll go with what Wolf said, fear and greed. It is the fear index after all, the VIX is. So we'll go with that. So that means if you made it this far in the video and you got to prove it to all the other suckers, including myself, you got to type in the comments, whether you're on X, whether you're on YouTube, you got to type in fear and greed. All right. Also, if you have any questions or if you want me to do an update on the VIX video, kind of like this, maybe once a month, let me know in the comments, something like that. I'll be happy to, because I'm having fun talking about the VIX. Anyway, I'm out of here. I hope everyone has a good day. Thank you for joining the live. Thank you for watching after, and have a good day, ladies and gentlemen. Later.